Today, we have in the studio the Managing Director of Jaiz Bank, Malam Hassan Usman, to discuss MSMEs funding and financial inclusion. Glad to have you.
Thank you for having me.
Now, how would you describe the nightmare associated with funding medium, small and macro enterprises?
Well, you know, this is not peculiar to this country. It's an issue that has global impact. SMS is a sector that needed to be addressed because everywhere in the world they are the engine of growth. They provide the catalyst to development, and they are the major employer of labor. So no government, no community, no country want to ignore MSMEs. That is micro, small and medium enterprises. World over, they are the engine of growth. And in Nigeria, if we have to see real development, we must address this sector. And I'm happy this government has tried to address by setting or enforcing or strengthening specialized institutions like the Bank of Industry, Bank of Agriculture, recently Development Bank of Nigeria, and other efforts by the Central Bank of Nigeria to provide a robust arrangement that will support the funding of this sector of the economy, which is very important.
You are talking about addressing the challenges of funding. Now, where loans are available, the issue of high interest rates is a major problem. It's still double digits.
Well, you see, you have to look, you can't talk about interest or cost of financing out of the context of every country. People try to compare what other countries charge, or the UK, Europe, America, the interest rate regime. But you have to check what is their inflation rate. In Nigeria, inflation is double digit. Inflation is the rate at which the other definition of inflation is the rate at which your currency is depreciating against commodities in the country. So if you are giving a loan to someone, even as an individual, and you have to wait for a year, and the money's value will depreciate by 10-15%, you can imagine what type of interest or what type of cost you will associate with financing. I think this is the context. But of course, yes, if you charge too much interest, or in the case of like my bank, we do not charge interest, but we do trading and add a markup.
Are you saying shorter loans would be cheaper?
Not necessarily. The issue is about also the cost of doing business. A bank is like any other institution. They gather monies from depositors and then they provide financing to those who need this funding. So they have also cost of operation, and they also have to remunerate those people who brought those deposits, either by way of interest or profit, depending on the type of banking system you operate. If you are operating a non-interest or Islamic banking, you don't charge interest, rather you sell, you lease the commodities, so profit that you generate is what you share with the owners of the money, that the depositors. So either way, you have to have some level of profitability to be able to sustain the bank. And that is why, because the banking, commercial banking is driven by the profit, that's why government intervene, knowing that definitely this sector of the economy have their capacity to pay a commercial rate of funding or borrowing is also limited. So those interventions come. But at the end of the day, care has to be taken, because no matter how large intervention by government, if it is not sustainable, you will just have 1-2 years and then they will get tired, because you cannot continue to be providing money from the government and then you are not able to recover the cost of operation and also recover the capital. So at the end of the day, you'll be losing the resources. You will not be able to sustain the operation. So there has to be a balance between what is affordable and what is sustainable.
Okay. You did make mention of government intervention. Now, recently we had an initiative where collateral-free loans were introduced by the federal government. How would you assess government efforts in checking this challenge of financing?
Well, you see, even when you introduce this type of loans where you are not asking for collateral, you still have to go through the distribution channel, which are the commercial banks, because they are the ones who know how to package this in and ensure that most part of this money comes back. If you give out loans without the necessary support and comfort, the people will not pay. So you have to organize the means, even where there is no collateral, then you have to organize the people in such a way that they reinforce themselves through collective groups that will provide comfort to the lender. Otherwise, the money will not come back, and then you will not be able to have a sustained operation. Now, the other thing that the central bank brought is to allow people who may not have fixed type or the traditional type of collaterals to be able to access financing. Maybe they have a car that's movable items. They have a car, they have furniture, another thing that are not of a fixed nature, so that they can register, and then the banks will then be able to use that as a collateral to support whatever financing or lending they are doing. Now, but overall, what you needed to do also as a nation is to ensure that you have a very good identification system, so that identification, once a bank take someone on, they are sure that that person is that one identical person that you cannot you can always get him if he borrows from the bank.
Now we are talking about loans, we are talking about collateral, we are talking about financial institutions. Where does financial inclusion come in all of this? Are we saying everybody looking for funding is bankable?
No. What is happening is that there are everywhere you have level of strata in society. There are those who really are almost out of the financial system, and they are large, and especially in the northern part of this country, there's about 30 or more than 30%, almost 48% of the people, adult population, are excluded from the financial scheme. And the government's effort is to see, using commercial banks and other agencies, how do we bring as many of these people as possible through the use of technology. Today, you know, almost everybody has a mobile phone, or through agency banking, getting people who have some kind of business to serve as agent of bank, because banking is about making profit. So you cannot be able to establish branches in every location, and the majority of the people that are excluded are in the villages, where you cannot have a sustainable operation building block and mortar kind of branches. So you are going to be using alternative channels, the fintech of this world, and using agency banking, which is now being developed at grassroots level, to be able to accommodate this level of customers and bring them. And it makes, eventually it makes business sense for the banking industry to have as many customers as possible, but these customers have to be profitable, and the method of delivering these services has to change. It cannot be the traditional method.
Now, how optimistic are you about this financial inclusion?
It's not easy, but it is something that even we, as a new entrant in this market, we are making a lot of effort. Last week, I was in far village, a remote village in Jigawa State, to see how we can work with those people who are growing fruits, growing food, to put them into groups, use agency banking, bring them to have an account in the bank and then channel financing that will help them to grow their business and also reduce the impact of the middleman, because people who produce watermelon, you take it in Abuja here, you don't know where it is grown. It's grown as far back as Gumel in Jigawa State, but they produce it, they sell for 50 naira. And the middleman will bring it to Abuja and sell for 500 naira. So we try to see how we can provide this funding to them through the cooperatives and using agency banking so that they can grow their own potentials and increase production, and also as well as increase their income level. This way you can now grow them out of poverty and then also into the inclusion. So inclusion will happen, but it is something that the banks and the government will have to work together to provide.
Mala Hassan Usman, Managing Director, Jaiz Bank. A pleasure having you on the Business Express.
Thank you for having me.